Gold just hit $4,400 per ounce. If you're watching this, you're probably thinking, did I miss it? Is it too late? I'm going to give you the brutal truth based on 50 years of data, including what happened to people who bought at the 1980 peak and waited 30 years to break even. Today, we're answering the question everyone's afraid to ask.
Welcome back to another Straight Talking episode. I'm the Diversify Guy. I've been calling it like I see it for years now. While traditional finance advice remains largely unchanged, I'm showing information about alternative investment options that you might not know exist. Remember, do your own research. I'm not a financial advisor, just an enthusiast, so always consult with a financial professional before making investment decisions.
Gold has set over 30 all-time highs during 2025 alone. It peaked at $4,400 on October 21st. As I'm recording this, it's trading around $4,080. People are freaking out. Did I miss it? Should I wait for a crash? What if I buy the top? Today, I'm getting you historical data on every major gold peak, 1980, 2011, and 2020, showing you exactly what happened to peak buyers, how long we waited, and whether it's actually too late. By the end, you'll know the answer. Let me be brutally honest about the worst case scenario because this is what keeps conservative investors up at night. On January 21st, 1980, gold hit $850 per ounce. This peak was driven by the oil crisis, Iran hostage crisis, 13+% inflation, and Soviet invasion of Afghanistan. What happened next devastated peak buyers. 1 year later, in June 1982, gold had plummeted to $305.50, a 65% decline. 3 years later in 1983, gold still traded in the $300 to $500 range. 5 years later in 1985, it remained stuck at $400. 10 years later in 1990, gold traded at $416, still 51% below the peak. The ultimate bottom came at $252 per ounce in 1999, nearly 20 years later, representing a negative 70% drawdown from peak. Time to recovery was agonizing. It took 29 years until September 2009 for gold to reach $1,000 per ounce. It took until 2011 to truly exceed the inflation-adjusted 1980 value. Someone who bought at the 1980 peak of $850 and held was underwater for merely 30 years in nominal terms, experienced a negative 70% drawdown over 19 years, and needed to hold until 2011, 31 years, to see real inflation-adjusted recovery. This is the nightmare scenario critics point to when they say it's too late. But here's what they're not telling you. The pattern changed. In August 2011, gold hit $1,900 to $1,920 per ounce, driven by a U.S. credit downgrade, Eurozone debt crisis, and Fed QE. The recovery timeline was much faster. 1 year later, in August 2012, gold traded at around $1,600, down 16%. 3 years later, in 2014, it fell to $1,100 to $1,300 range, down 40 to 43%. 5 years later, gold bottomed in December 2015 at $1,053 to $1,060, a 45% decline. But here's the difference. Gold sustainably exceeded $1,900 again by 2020, a 9-year wait, not 29 years. For specific 2011 peak buyers who purchased at $1,900, by December 2015, they faced a negative 44% loss. By 2019, they remained 30% underwater. By August 2020, they finally reached break-even, approximately 9 years. By November 2025, they're up approximately 115% 14 years later. Worst case scenario, 44% drawdown lasting 4 to 5 years before slow recovery began. But recovery happened in 9 years, not 29. In August 2020, gold peaked at $2,075 per ounce, driven by COVID-19 and unprecedented monetary stimulus. Watch this timeline. 1 year later, in August 2021, gold traded around $1,813, down 12.6%. 2 years later, in 2022, briefly touched $2,074 in March during Ukraine invasion. 3 years later, in 2023, gold consolidated in the $1,800 to $2,000 range. 4 years later in 2024, gold broke out strongly, exceeding old highs. 5 years later in November 2025, gold trades at $4,080, a plus 97% gain. The verdict for 2020 peak buyers: short correction period of just 1 to 2 years, measure 10 to 15% maximum drawdown. Recovery to new highs by late 2023 or early 2024, approximately 3 or 4 years. Now sitting on nearly 100% gains after just 5 years. This represents the mildest correction and fastest recovery of any previous peak. Do you see the pattern? The recovery from 1980 took 29 years. From 2011 took 9 years. From 2020 took just 4 years. Each subsequent recovery has been dramatically faster than the previous one. I'm normally skeptical of this time is different arguments, but the current drivers for gold are fundamentally different from any previous era. Central bank buying has reached unprecedented levels. Annual purchases totaled 1,136 tons in 2022, a record, 1,051 tons in 2023, 1,045 tons in 2024. This is the first 3-year streak of 1,000 plus ton annual purchases in modern history. Central banks now hold more gold than U.S. Treasuries for the first time since 1996. U.S. debt crisis. Current national debts stand at $36.2 to $37 trillion, over 120% of GDP. TBO projections show $52 trillion by 2035. Interest payments alone are projected at $1.4 trillion annually by 2034, rivaling defense spending. Geopolitical factors create persistent safe haven demand. U.S.-China trade war with 100% tariff threats, 43-day U.S. government shutdown, longest in history, Middle East tensions, Russia-Ukraine war now 3+ years, Taiwan tensions with China military drills. Each crisis has pushed gold higher. Goldman Sachs, one of the biggest investment banks in the world, has specific targets. $3,700 per ounce by end 2025, $4,000 per ounce by mid-2026 baseline, $4,900 per ounce by end 2026. Their upside scenarios project $5,000 plus if Fed independence is threatened. They declare gold remains our highest conviction long recommendation. Other major banks cluster around similar targets. Bank of America, $4,000 to $5,000 range. Citibank, $3,800 baseline. UBS, $3,800 by end 2025, $3,900 by mid-2026. Peter Schiff maintains near-term targets of $4,200 per ounce, medium-term potential of $26,000 per ounce, and long-term projections of $100,000 per ounce. Robert Kiyosaki offers near-term projection of $3,700 per ounce as next stop, medium-term target of $5,000 by 2025, and extreme scenario of $15,000 per ounce long-term. His key message: people ask the wrong question. Don't ask what's the price. Ask how many ounces do you own? Based on historical evidence, no, it's not too late if you have a 10+ year time horizon allowing you to weather corrections. You can tolerate 10 to 20% volatility without panic selling. You understand gold is portfolio insurance and wealth preservation, not get-rich-quick speculation. You don't invest money needed within 5 years. You use dollar cost averaging if concerned about timing risk. Yes, be cautious you're expecting quick 2 to 3x returns in 1 to 2 years. You need the money within 5 years. You can't stomach seeing negative 20 to 30% temporary drawdowns without selling. You're looking to chase momentum without long-term conviction. You're using money you can't afford to lose. Experts typically recommend 5 to 15% total allocation in gold depending on risk tolerance. You can DCA over 6 to 12 months to reduce timing risk and rebalance if allocation grows beyond target. But remember, this is long-term wealth preservation, not speculation. The evidence suggests that for conservative investors with appropriate time horizons, dollar cost averaging, and realistic expectations, gold at current prices represents a reasonable allocation for portfolio diversification and inflation protection, not a speculation that's too late. The structural changes in global monetary systems, central bank behavior, and geopolitical alignment appear to be multi-year trends rather than temporary phenomena. Past performance does not guarantee future results. While gold has always eventually exceeded previous peaks, the 1980 example demonstrates buyers can remain underwater for decades. But 10 to 20% corrections can occur at any time. The key question isn't whether gold will be higher in 10 years. History suggests yes, but whether you can maintain discipline during inevitable interim volatility. Most importantly, do your own research. I'm not a financial advisor, just an enthusiast sharing information. Always consult with a financial professional before making investment decisions. If you found this analysis valuable, hit that like button and subscribe. Drop a comment. Did you buy gold already, or are you waiting? I'm the Diversify Guide, and I'll see you in the next one.